the market has been performing fairly well in the past week. So it looks like after a pretty rough start to the year, it looks like it's finally turning around in the stock market. So the portfolio value is up to $12,982.45. We're up about 1% in the last day. We're up 4% in the last week, up $502.16. Past month, we're up $546.13 or 4%. Past 3 months, $443.19 or 4%. Past year, we're up $1328.23 or 11%. And then all time, we're up $1,341.34. So I'm gonna cue the intro and then we'll go into my buys and sells for this week. So it appears that all my holdings are steadily going back up again. So it looks like Apple's up 19%. So Apple's recovered. It was in the low 150s. Looks like it's going back to its highs. We'll see if it can go back up to 180 again. AQN has pretty much evened up for me. So this position has been in the red for most of the time that I've owned it. The big turnaround story for the last week would be Alibaba. This was as low as $76 last week, and we were down about 45% in the position. It has improved. I believe that the Chinese government has stated that they are going to be more willing to, be open with their books, with their audits for their companies. So with that, people are less afraid of Chinese stocks being delisted or removed from American markets. And Alibaba also announced that they're going to be buying back $25 billion worth of their shares, and that's generally very good for you because you get a bigger piece of the company, which means your shares become more valuable without you investing any more money. They were going to do a $15 billion buyback, but they're going to do 25. So great news for Alibaba shareholders. And the big takeaway from this is, if I panic sold this last week, I would have taken a gigantic loss. And there was no reason to. Nothing was wrong with Alibaba, the company. It was just, the stock price and the market. So, don't react to how the market is reacting. You need to base all of your actions not on emotion, not on the emotions or sentiment of other investors, but just based on what is your research on the company telling you? What do you value the company at? And is there an issue at the company? Is there a valid reason for the price of the stock dropping? If there isn't, then, it's probably a good time to buy. I didn't just because my position size was already, I already have my allocation of Alibaba in my portfolio. So I'm fine with just holding the position for now and just seeing where it heads in the future. And it's a very volatile holding, the most volatile stock in my entire portfolio. Again, it's very important that you know and are very confident in your companies, know them inside and out, and all the news about them. So really, really good recovery for this one. Not that the price matters in the short term. This is definitely a 5-10 year hold for me. So I definitely think the price is going to be a lot higher than it is today. BAM has definitely come out of the mid 60s. Now it's over 71, so now we're actually in the green on this position. The banks are doing great. No real news there. The income funds all doing well, giving me more income. I did buy 2 more shares of ETHY just because it took a nice dip, so this pays me a nice large dividend every single month, and we get to have a little bit of cryptocurrency exposure. So we're still in the red on this one, but it has climbed out, from the $5 range. So we just bought a little bit more, trying to keep this position to 2% or lower in my portfolio. And I also bought more Google. So it has climbed up from, the $2,600 range. I still think, at least for me personally, it's a buy all the way to $3,000. After that, I'd have to, reconsider maybe putting money into other positions. And one of those positions would actually be Granite Real Estate Trust, just because I've been so focused on other sectors and other companies that my real estate allocation of my portfolio is under 10%. So I kind of want to get that back up to 10%. So definitely going to be looking forward to adding more here. And with the other companies, Loblaw's actually recently acquired a company. So it's going to expand their healthcare and kind of just blend in. It's going to synergize with their Shoppers Drug Mart business very, very well. And, their Shoppers Drug Mart business in the last year grew same-store sales by 5%. So that means without opening any more additional pharmacies, they've increased profits by 5%. So that's just great news for a Loblaw shareholder. Inflation is still running rampant. You're probably noticing this when you're buying groceries. So it's probably not a bad idea to be an inflation-resistant business where, they can raise prices and pass the costs on to you. I mean, what are we going to do? You can't stop eating. You don't really have a choice. You need to eat. And Microsoft has recovered very, very well. We're almost even on this position. It was in the red for quite a while, but again, I did find better value in Google. That's why we focused on, acquiring as much Google as we could, while still, increasing our positions in other companies. And I bought another share of Power Corp of Canada. So we're down a little bit in this position, just down a little over 5%, but I'm going to continue averaging into this one just because it's giving an over 5% yield, and they grow that dividend yield over time, and they do have increasing revenues as well. So this is the company that owns Wealthsimple and Great-West Life. So yeah, they basically own the program that the brokerage that I use to invest. So if you aren't investing yet, it's never too late to start. The best time is yesterday, but I guess second best time is right now. You can join the link in the description below and get the value of up to 2 free stocks worth up to $4,500 if you sign up before March 24th. Otherwise, I believe it's just one stock usually. So you can use that link in the description below. And I also purchased another share of TELUS. So this one has run up a lot, but I think that, it's a little bit over its fair value slightly, but honestly, it's not an offensively priced business or anything. It is definitely one of the companies that I want to acquire, just like the banks. I want to have enough shares of this to where every 3 months I can buy a free share of TELUS and basically drip, just start reinvesting my dividend, acquiring more shares, and then that process will just continue. So I want to do that with TELUS. I want to do it with TD. I want to do it with Power Corp, and I want to do it with Scotiabank as well. So it's going to take quite a bit of time for me to acquire enough shares, but I'm just going to keep depositing, just keep increasing my positions so that it will happen over time. I started with just a couple shares of all of these positions, and they're growing, and our dividends are growing as well. And for the dividends earned in the portfolio, I've earned $391.35 so far since opening the portfolio last year in February of 2021. Our annual dividends are now up to $656.72 per year, and monthly we're earning $54.73 every single month from our portfolio. Is going into the cash account, buying more shares, buying more dividends, and we're going to get this snowball rolling, and then one day we'll have an avalanche. So we just got to keep working on that. And daily we're making $1.80 per day. So we're slowly approaching my goal of earning $2 a day in dividends. So we just need to keep depositing. I think I need like about $720 or a little over $700 to make $2 a day. And then once we reach that goal, I'm going to have a goal to make $3 a day. So we're taking these small little achievable steps as I grow the portfolio. So, we're always seeing progress, and we're trying to, just stay motivated, because it's very, very tough, especially in the early stages of your portfolio when your dividends aren't that big, and most of the gains in your portfolio are really just your deposits coming in. But I hope to eventually just have my dividends become so large that my deposits just become a smaller and smaller factor the later on I go out. So the plan is just to have this income stream growing. So, maybe I can pay a few bills and then eventually maybe just provide all of my income in the future. I just have to keep depositing into this account consistently, picking great companies, holding them for the long term, and finding, opportunities in the meantime if there's a short-term situation with a fantastic quality company. So right now I think that's happening with 3M and Starbucks. So both of these companies have come down a lot from their all-time highs. I think 3M is a better value, but doesn't have the growth that Starbucks has. So I'm definitely considering these two positions. I'm still really into Google right now, just because I'm going to continue purchasing it and adding to it. And once the price jumps up, or I just reach my size of Google that I want, I think about 5% should be good for Google. I may look into another holding just to diversify a little bit. 3M would give me industrial, Starbucks would give me like another consumer cyclical or consumer staple, very popular coffee chain, and they do plan on opening up to 55,000 stores by 2030. So they would actually be the largest restaurant chain or restaurant franchise around the world. So they have a lot of growth plans. They grow their dividend aggressively at a very high rate, and they buy back a lot of shares. So very shareholder friendly company. And Starbucks is just a very strong brand overall. 3M just makes 60,000 different products, well, more or less. So they are basically, if you were to look up diversification in the dictionary, you'd probably see 3M. And then I just want to look at just the dividends earned year over year. So in 2021, we earned $261.80, and in 2022, in just 3 months, not even, we have earned practically half of the amount of money in dividends that I've earned in all of 2021. So we're seeing here that, I'm going to surpass 2021's total dividends very soon. And this is just going to be a continuous trend over the years and over the months. As my portfolio grows, I keep contributing more money, my dividends grow bigger, my companies will increase their dividend payouts every single year because I pick good quality companies that can raise their dividends over time. So if you want to follow along from week to week, just watch my buys and sells and anything I learn along the way, anything I can learn, any mistakes I make even, or if you can point out anything that you disagree with or that you agree with, please let me know in the comments below. And if you've watched the whole video, please subscribe to the channel. We're trying to hit 400 subs, so please subscribe and like and comment the video if you enjoyed it. I'll see all of you in the next one.